Hello everyone. So we are coming to the end of February. Hope everyone has had a very exciting 2021 so far. In terms of the overall market, as we can see, things are starting to taper off, starting to start coming off already. Volume is starting to diminish across the board. Naturally, you still have strong in search of volume for various cryptocurrencies. Obviously, we will be covering that in this video. I'm going to try to keep the video as short as possible, but I think we want to cover a few key points. First, existingly the allocation of our portfolio. That means in terms of percentages, roughly how much should you be holding, and at the same time, the the exposure of the existing cryptocurrencies, which should be around 50% at this point of time, because I did mention that we do a 50-50 approach, a little bit more on a balanced approach, because we do not know how sustainable or how supported BTC will be at the current levels, which to me, I will always go to the side of bearish, meaning that we should expect more downside, but at the same time, we should not shy away from trying to take shots on the market, which is to start trading, and then we cannot also not do anything. So obviously, as of now, I'm clearly aware of the existing trades that are out of the money, and as you can see, it is harder to make money at this point of time. It's not as straightforward. So that's where the group's resources comes in, right? Where we start switching our strategy from purely being very aggressive to a more contrarian approach, where we go for smaller accumulation positions, meaning when I say smaller, we're literally talking about $100 to $200 per position, just building that position until we see a reversal in the overall market sentiment. Then from then we will be able to make a better decision on allocating more liquidity or more capital to that particular position. So as of now, I think a lot of you are maybe slightly below 40% as of yesterday, because I did mention that yes, Ethereum being that month end. So why did I make that call? Firstly, technically, I don't find Ethereum very attractive, but I believe that everybody has made a decent amount of profits in the past 2 months leading up to today, that they would have at least enough profits to park some money into Ethereum. So Ethereum, as I did mention, we will always only use profits to buy. Why? Because the prices for Ethereum at this point of time are considered parabolic, right? Just like many other cryptocurrencies, there's no way to determine any form of intrinsic value that can substantiate why prices should be where they are at this current point. So when I say throw profits, I literally mean that, because since it's profits, nobody's going to feel painful about it. Naturally, I do understand that there are members that are coming in very recently and are using and dedicating their actual fresh hard-earned capital into the market. So naturally, the risk premium will be higher for those individuals, but at the end of the day, it also still poses a great opportunity, because once you see the whole market start to take off again, if you are going to be accumulating from now till that point where we see that uptick or that uptrend momentum, at least you already are starting to build your positions so that you can reap the benefits, just like members who were in the market since early 2019, 2020, and of course naturally those who even came in at the tail end of 2020 before this run. So in terms of market movements and token multipliers, that means literally when the token price multiplies by more than 10x, you're starting to see that. So market cap is obviously at a new all-time high in terms of its size, right? We are at roughly hovering about 1.4 trillion to 1.5 trillion. Prior to all this, prior to this new year, we were slightly below 500 billion, right? And for a good 2 years, in fact, we would never really cross 500 billion and sit comfortably above that. So these are the things that you are starting to see now. You're seeing more institutions, for example, MicroStrategy. You're talking about Tesla, and I'm sure there are many other corporate companies that are coming into this market, willing to put their reserves, at least 5%, 10% of their reserves, their cash, because they know that dollar is devaluing or going down in value, depreciating, right? Because of all the stimulus, as we know that there's going to be a 1.9 trillion stimulus package that's coming, and since Biden took office, and at the same time you're going to be seeing stimulus checks. Most likely, depending on the size, right? Still, Senate has to approve, right? On whether or not $1,400 per individual, or 2,800, depending on the married couples, so on and so forth. I did share that article in the chat. So as you see the dollar go down, there will be a natural shift towards alternative investments, and I think that goes for, of course, traditional investments as well. The stock market, you should see some buoyancy, but plenty of volatility. As we know, stocks like Tesla has been doing extremely well, but they are also coming off. MicroStrategy stocks did very well because of BTC as well. So a lot of these companies are diversifying. They are diversifying themselves, so we should definitely follow the trend. The trend is your friend. Okay, so looking at this current situation, how should we go about in terms of from an investment perspective and also from a trading perspective? So all this will be covered in this video. Okay, so let's look at the charts first. Okay, so for BTC, at the moment, right, you can see that BTC is still largely bullish. Okay, it's still on a very it's no longer as parabolic. In fact, it's starting to taper off. But like I said, I'm always wanting to prepare everyone for that really sharp drops. These sharp drops are the ones that kill those who are having margin positions, right? Margin basically just means $1. $1 that you put into the account means is potentially anywhere from 3, 5, 10, 25 or 100, depending on what kind of platform you're using. I would advise everybody not to use it unless you are someone who has the ability or the freedom of time to monitor your position, or naturally you are very accustomed to using stop losses in those trades. So if you are totally not versed, please do not touch the cross X or isolated X5. Please do not touch that. I know that it's readily available. The curiosity of being curious as a human, as a cat, whatever you are, okay, you are going to naturally want to venture and see what that is. For now, we just stick to spot. Okay, but as I mentioned, margin is just very simple. 1% of movement depending on what margin you're using. Naturally, you can either 3x or you can actually be in the negative very quickly based on the movement of that particular token. That's just all it is. Okay, we want to build sustainable long-term capital appreciation in your portfolio. Please do not mess up the strategy, because I'm laying this out very simply for everybody. I'm not here to promise you quick gains, but I do and have most likely proven that every time, if anyone who sticks to the strategy with this group, you will eventually reap the financial profits, okay, that are in this market. It's just a natural progression. When you come in also matters. Okay, so once again, we are going into the charts for BTC. For now, okay, we are clearly in a downtrend. Okay, we are clearly in a downtrend. No doubt about it. We are in a downtrend. Let me just cut a few things off. Okay, we are now looking at the fact that this market is already starting to show could be a potential shoulder ahead. So more downside to come. Okay, so tentatively, I would say that the market could be very well supported at the 28,000 region. So let's just draw a very simple FIPS. So technical indicators, guys, are very simple. When you're watching my videos, I will never use bombastic language to sound smart or whatever. Okay, it's really irrelevant to me. I feel that as long as you have a very firm understanding of where BTC stands as an asset class, you will have no doubt in firstly a holding BTC, and at the same time you will have no doubt in the crypto market, because there are so many promising companies out there that I feel that, yes, I know everybody at the moment, if you speak to them, they only know about BTC. So but and to me, why am I talking about BTC? It's not because I feel that BTC is the only cryptocurrency that has long-term value. In fact, no, I don't. I feel that there are other cryptocurrencies that will give us a better ROI, but the whole world only knows BTC. And as of now, and still, that being the case, BTC will still lead the market. Okay, so meaning that when BTC is having a very good upward steady uptick, you will see altcoins, alternative coins also go up in value. But at the same time, you're starting to see a decoupling where you see certain cryptocurrencies going up when BTC is going down. That just shows that there is a resilience in that particular cryptocurrency, and at the same time, obviously, they have a certain community or investor mindset willing to hold and continue to buy up the tokens for whatever fundamental or technical reason. So take note, there are plays like that, or we call them plays. Okay, we just for simplicity we call them plays in this market, and I feel that there will be plenty of opportunities like this throughout the year. Okay, so right now, okay, I would say that the 0.618 ratio for Fibonacci, right, will always pose as a very good place where we try to park more orders or potentially buy more BTC. But as of now, if resources are limited, I would prefer your build positions in Ethereum, because I think at the end of the day, the larger accounts will definitely go for BTC. The smaller accounts will definitely go for Ethereum. It's very, very normal. It's the same thing where I think everybody, when I was speaking and doing my rounds with you guys, that I think most people love to hold or hold tokens that have smaller unit value. I think that is something that I must try to correct as quickly as possible. It doesn't mean that the units being small means it's better, okay? I understand everybody likes that, but we work on percentages. When we put $1,000 into H bar, for example, okay, I know that the mentality is what if H bar does X, right? Your $1,000 becomes anywhere from $5,000 to $10,000. But let's look at what is realistic. What is realistic at this point of time is working on percentage profits. Profits on based on your percentage. So whenever you make money on your $1,000, say 1,000 does 15%, that is $150. Doesn't matter where we make it. It can be from Uniswap, it can be from Ethereum doing 15%, it can be from even Bitcoin making for 15%. It's still the same. Okay, whoever can give us the 15%, we dedicate our capital to that particular trade, because potentially it's based on a spectrum of coins in total. Okay, there are going to be plenty of opportunities throughout the year. So I would say that don't be too hardcore in accumulating a particular token just because you think it's cheap. To me, there's cheap, expensive is irrelevant. The market is always correct. If the market wants to buy up Bitcoin up to 60,000, and even at 60,000 the market deems it cheap, it will continue to trend upwards. Okay, so trend is your friend. Trend is your friend. Don't think that, and just because a token is 1 cent doesn't mean it's cheap. If the market doesn't like the token and it drops to below zero, it drops even below 1 cent, that means the market deems it expensive. It's simple as that. Okay, so I'm just saying that these are the things that you have to be mindful of. Okay, please correct your mentality. Don't keep plowing just because your account is small. You keep plowing your money into for example, the volume is diminishing on Curve. You keep plowing because you say, oh, okay, Curve is already below $2. I keep plowing my money into Curve. No, it doesn't matter. Even if you own two BNB, for example, because your account is less than 5k, you buy two BNB, it's gonna literally put you to 10% on that position already. And you say, I only have 2 units. But if BNB from, say, for example, now $220 moves up to $300, okay, that means you already made $80 per BNB. That's $160. Okay, $160 on that 2 BNB, right, is massive, guys. It is massive because you must train your mind to think based on percentages, not on the number of units. Okay, we must pass that mental thought already. We must not think like as if like, oh, okay, having more, and then you listen to all the stories where people buy the small minuscule tokens, and then suddenly the token from 2 cents becomes $2. You do not know how much that person is investing. Okay, so there are a lot of trolls, as you can see. There's a lot of communication here in the cryptocurrency section, just in TradingView alone, and I'm sure you're going to join some forums out of curiosity. Please do not let them poison you, because they are not having your best interest at heart. This group, you join me, you pay a subscription, you have paid me for consultation, please stick to the strategies that I'm imparting to you, or else please don't join. You can don't renew. We will not have any relationship because you're not listening to me anyway. Okay, so I'm not saying that anybody is doing it. I'm very happy so far. I think everybody has been playing ball, everybody has been very attentive. But what I am concerned, when people stop making money easily, they deviate from the strategy. That is why I'm very concerned, because I've seen it happen before. It's totally fine. I've run my group for almost close. This is the 5th year running already, almost the 6th year. Okay, to me, I understand people love instant gratification. When they don't get the instant gratification fast enough, can you imagine you join me in the last 2 months only? You have enjoyed so much gains that you are spoiled. Your brain is thinking that this will always continue. No, I can straight up tell you today, no, it will not continue. You're going to have quite a number of months of purely accumulation and very, very boring trades, because to be frank, investing is boring. Waiting is boring. There's a lot of uncertainty. Everybody loves fast. That's why everybody loves to buy into the green candle when actually they should be selling into strength and not holding like blindly and hoping for the best. That's not really the way. The way to look at it is that is there continuous momentum? If there's continuous momentum, okay, great, we put money in. But with the mindset that there's going to be enough volume to push that particular token. If the volume starts to diminish and you put your money in when the volume is diminishing, you can expect that your money is going to be stuck. Your capital is going to be stuck. And I think nobody wants to have that. Okay, no one wants to be in that feeling. But it cannot be avoided as well, because sometimes we will get stuck. We are going to have situations where, oh, okay, we entered during the wrong timing. Okay, it's very normal. So when we enter at the wrong timing, how do we recover? So I'm going to be covering all these things, but let's just look at this first. Okay, so BTC, as you can see, has done pretty well, but I think in terms of volume, we're going to see a large we're gonna see BTC have to quieten down first, until we see that happening. Okay, until we see that happening, we will maintain a more conservative stance. So as you can see, it's already at a key support line, which is 45,000. Technically, I'm sure it will bounce, but I feel that this ratio here, the 0.5 and 0.382, will be where we will be at, depending. So it looks to me, trajectory wise, we should see it March, April, we should be around here. Okay, but that being said, we cannot ignore for the fact that it is also in a upward trend channel. Okay, we are in an upward trend channel. Okay, so where is that upward trend channel? So here is the upward trend channel. Every trader will be looking at whether or not we stay supported at 40k. Okay, every trader, 40k is also just a psychological number. Just it's just purely that 40,000. Human beings love whole numbers. We are not into the decimal points and whatsoever. So 40k will be a very should be okay. There'll be the bulls and bears fighting at this spot, right? Naturally, a technical bounce is possible, but there could be also a sharp breakdown would definitely mean that 30k will be where we start fighting again. Okay, so bear in mind, I will not put out any real hardcore accumulation plays for BTC, but naturally occasionally I will start putting out once I see enough of a drop. Bear in mind, we had a very stellar rise from where we were at just in 11th of March. So BTC has okay, wait, hold on. BTC has already went up in value. Okay, let me just get the okay, just this year alone. Okay, we just take year to date, okay? Just year to date alone. See, BTC did so well. See, that's the thing, you see. BTC, imagine 30th. Okay, so 1st of January. Insane, guys. Okay, okay. The thing is for January, okay, if you look at January, okay, I mean it's not as accurate, but just bear with me. Just January alone, January till year to date, BTC actually went up 2x only. Okay, but in actual fact, where did it come from? Okay, where did it come from? Let's look at the bottom to the top. Okay, it did 1,260. That means it did 1,216% increase. Okay, 1,216% increase. So 12x okay, so it did 12x so far. So there's plenty of room for correction, guys. Plenty of room. Plenty. Okay, I want you all to see that. I want you all to register. There is plenty of downside. Don't buy into whoever is buying. There's a lot of momentum. Okay, there's a reason why all these public forums are pushing out these articles, because you want to create as much bullish behavior in the retail space, right? That eventually any dump will not be felt. But if there's going to be a harsh dump and you are caught unprepared, you're going to panic sell. I do not want this group to be in that situation. Please don't panic sell, okay? Don't panic when you see your altcoin portfolio dropping 20% in a day, 30%. This is very normal in crypto. It's really like that. Okay, so just bear in mind. Okay, now we look at Ethereum. Okay, let's go to Ethereum. Ethereum price-wise, I would say same thing. Went parabolic. Sorry, ignore because the Ethereum charts are a little bit more messy. Sorry, what am I doing? Why is this? Why am I doing this? Okay, so Ethereum charts, right? Not very nice, to be honest. Not very nice. Looks a little bit more choppy. We are monitoring whether or not we see a more sustained price action. Okay. Firstly, why is Ethereum looking less attractive? There are not many fund managers, right, wanting to accumulate Ethereum now. I would say that Ethereum's play would be 2 years later, because they just transitioned to proof of stake. So when they just transition to proof of stake, okay, a lot of fund managers want to see how sustainable is Ethereum's price, because they're going to be pumping in plenty of money. I want the group to be very prepared for this. If you have zero Ethereum or very little Ethereum, eventually when they decide to start building up the Ethereum funds, right, ETF, because there has to be eventually some delivery of Ethereum to their clients, and custodian services are already working towards supporting Ethereum 2.0. And if you have no Ethereum and once the run comes, you're going to be missing out. You think that right now 1,400 is cheap, right? Sorry, it's expensive. Actually, it's not. It's gonna do much more. How much more I will never ever comment because, like I said, I'm not a fortune teller. Okay, but when you look at the price trend, okay, you are going to see for the fact that Ethereum will definitely also do very very well in this market because it is still number two. Okay, naturally there are other ecosystems. That's why I'm saying, as of now, I'm looking at the dot ecosystem, Cardano ecosystem. Okay, and why dot and Cardano are also very attractive as of now, because they were already proof of stake, or basically they are already wallets that they already are a proof of stake algorithm, whereas a consensus algorithm, whereas Ethereum came from a proof of work. Just like BTC is still a proof of work, but Ethereum is a proof of work, but it's not as efficient compared to a proof of stake. Proof of stake is just much more efficient in terms of validating transactions and functioning on any one server, whereas miners and all that, this is more or less going to be a thing of the past and only is relevant and good for Bitcoin mining. Whereas nowadays everyone is transitioning to proof of stake. So for example, those out of the gate, like if you notice, those like out of the gate, like for example, if you see Dot, ADA, they are already proof of stake. So that's why their token price is moving in a much more exponential manner, okay, faster, because of that reason, because they're already proof of stake. So once Ethereum sorts out its scalability issues, gas fees, okay, the gas fees transactions are too expensive on Ethereum. So a lot of people are feeling that, okay, are feeling that pain point. Those who are developing are feeling that pain point. Those that are speculating, creating on Ethereum are also feeling that. Hence, they are shifting to Dot, Cardano. So in the interim, I would say that Dot and Cardano posts are gonna look way better in terms of potential speculation and movement. I would pick those. Okay. But long term, we're talking about in years, I would say that Ethereum would still be where we hold our core portfolio, our core amount. So please expect quite a bit of volatility and paper depreciation in your core portfolio. As I mentioned, core will never be part of the allocation inside, because I don't want to have people worry about Ethereum or BTC dropping in the interim. NFG, okay? We will not care about that particular two positions. NFG, please don't. Because once we deviate, we are concerned, we will always forget to start parking money into that. Okay? So far, when we look at Ethereum's chart, okay, I'm going to be putting out the levels as well. Okay, as of now, as you can see, we have already broken below one of the FIPS levels. So the next will be 1257. And I think I would safely say that a lot of support will start coming in at the 1K mark, because it starts to get much more attractive to a lot of people. So I see support really coming in at the 1K region to 1.2 region. Really, I really don't feel that it will just break below. And if it does, I tell you, we would want to make sure that we have enough bullets to start accumulating. Naturally, everybody will say, wow, 500 and 800 region is going to be attractive. Whether or not it reaches there is not the point. The point is, make sure you have the capital at hand to fire those bullets. That's why I prep the group to make sure that everybody has enough capital to work with when the time comes. Okay, so let's say we ignore, okay, clearly, okay, it's broken below already. We can ignore this portion as of now. We can ignore already. Now we need to look at the sub 1K. Okay, wherever and whenever we reach there. Okay, let's say we look at 1K, and then we will obviously alter this channel whenever possible. Okay, we will adjust this channel whenever possible. So take note, the next few months is going to be conservative. It's going to be more on the quiet side. We will start accumulating. I think people can start focusing on their jobs again. I think the market has been so active, so bullish, that I think a lot of people have like thinking like well, why am I working? We're making so much money in crypto market. Reality check, guys. Your job is always a very good thing. It's good. It brings in the very nice fiat that we know that is going to be depreciating, and inflation is going to kick in. Our purchasing power is going to go down, but it gives us the ability to build positions in key alternative investments or investable markets or asset classes that will help us to keep up with this very bad inflation, right? That is to come. So right now, let's observe and hold on first. I would say 1K, 1.2, 1K to the 1.2 will be a very nice accumulation. Hopefully that, of course, this channel holds. But even if it doesn't, we are looking at the 500 to 800 region, right? Or even the 800 to 1K region would be core supports here, okay? Because 0.618 and 0.5 FIPS levels are actually very, very strong FIPS levels. For whatever reason they break, it's always a manipulation. I always believe that it will sharply bounce and come back into these ratios. Okay. Now let's look at the out of the money positions. Now, of course, naturally, curve, all these are all showing. I mean, when you look at trading view, naturally there is a mixture of those who. So it's an algorithm, right? You see the technical this gauge, right? Strong sells, neutral buy, right? Because it based on the consensus of people pushing out their ideas. It's a very good platform. It's free for you to sign up. I'm not having a pro account or whatever, because I feel that I don't need that many technical indicators to function. Neither do I listen to whatever that's happening here. But it's good for people to use. And you can kind of read what are the so-called the pro and premium accounts, their ideas they put out. I mean, it's pretty standard lah, guys. It's pretty standard. So it's just more of a consensus trading, as they say. Curve not looking too healthy, obviously. Why do I say that? Okay, firstly, let's look at the crypto fees. Crypto fees. Okay, so fees wise, yeah. Okay, so Sushi and Uniswap have consistently been raking in pretty high one-day fees. So I'm monitoring as well. As long as the one-day fees are looking very attractive, there will be attention, but it also goes to show what kind of speculative market are we having. The more speculation, right, naturally these two will always maintain high. The moment the volume starts dipping, market starts to cool off, you'll see the one-day fees start to drop. And as you can see, Curve's fees are not very attractive. They have been dropping, but today it seems to be a little bit higher. It was actually at, I think, 35,000 to about 50,000. Then at the height, I think it was about 100. I think there was never a time that it was 100 over K. It's on the low, always on the lower side. So Curve has been having a drop in its fees as of late. Okay, even Polkadot also has dropped quite a lot. Okay, Polkadot's market in terms of its on-chain transactions. By the way, these are all on-chain transactions. Okay, so since we are having this very, very quiet market, don't forget it's also the end of the month. Okay, so expect more downside. Those who are having Curve, I hope that it's not a big percentage, right? So back to I can buy more Curve because it's less than $2. It's the cheapest now compared to DOT. It's cheaper now compared to Ethereum. Don't think that way. Okay, take it as a trade. The reason why we went into Curve was one thing at the time. Okay, at the time it was correlated to Uni and SushiSwap, right? Whenever Uni or SushiSwap made a move, eventually Curve would be the laggard. Sometimes it would move faster and more aggressively compared to the other two. But since then I have switched out. We still have a little bit of Curve. I mean, it's a very negligible sum for me. I don't have much Curve left. But I switched out, already moved on. But you guys who are still holding Curve, in terms of the trade. I have a small trade that we recently did for Curve, but other than that, it's not like gonna hurt my overall position. So as I mentioned, we stick to the percentages, because the percentages will save you guys. Okay, the percentages will save you. The more aggressive you are into a particular position and the rest of the group followed, right, keeping it conservative, but you went all in on your gut feel, then you must make sure that you do what you need to do when the time comes. If, let's say, for example, if you need to cut, you better cut, right? Because you went in larger than everyone else. Okay, so right now Curve looks more on a bearish downtrend. How low will it go? Nobody knows. Okay, and the volume as of now has dropped very drastically. Okay, I saw as of yesterday, I think it was about 2 million only. So that means the attention has already left Curve as of now. So you might want to you can hold. You know, if your position is less than 5% of the overall percentage of the overall portfolio, you don't have to panic. Just let it be, and until the next run up, when the momentum comes in for the segment, which is the DeFi segment, Curve, as long as they are still building, they are still getting attention, there are still going to be partnerships and collaborations, Curve also will start moving upwards. Okay, now the next one is H bar. H bar, same thing, also not as not looking very attractive from a trading standpoint. Okay, because okay, so see, look at this. We were accumulating H bar long ago. This was, by the way, what kind of time frame we're looking at. Okay, before August of 2020. Okay, you still could get very attractive levels on H bar, and even during the October to even early Jan, you would have an attractive reason. You will have more. You will still have the opportunity to accumulate H bar. Okay, then after H bar decided to make a move, and very nicely the 9 cents and the 12 cents, as you can see, posed as key sell-off points, because this is where the SAF1 and SAF2, or simple agreement for tokens, all right, basically these are early investors, 9 cents, 12 cents, and now you're seeing that, oh no, it's back to the 11, 12 cents. So let's see where this starts to consolidate and we start building as well. When you go and listen to more about what Hedera Hashgraph is doing, check out the channel Monetary Reset. I can link it later in the group. Okay, Monetary Reset. That channel has done a lot of research on Hedera Hashgraph, right? And Layman Bet, I would say that he's equally as intelligent, as not as vocal as Charles Hoskinson of Cardano, of course, but they are also building, and to me, there's a lot of potential for Hedera Hashgraph, but it's more of a long hold, and when it does move, it will catch the market very, very unexpectedly. So I will be wanting to relook at this once we see a consolidation period, not parabolic movement like this, because this is all purely, a lot of noise, a lot of speculation. Hence, you see the candles are wow, all over the place, right? But the moment you see this very quiet speculation, this very quiet move, right? You see this range and everything. That's when we start building up the position. Okay, let's hope we have that, because Hedera, I feel, has that potential, but same thing, I want people to go slow. I want people to put in amounts that they can put aside. It's not gonna burn a hole in the bank. It's not gonna jeopardize their position. So Hedera Hashgraph, definitely still a buy for me, but we look at better entry points. Algorand. So Algorand has relatively okay volume. Not the best, but okay. But I feel that Algorand, being that it's gonna hold, and USDC is actually building on them, I feel that there's a lot of potential for them to garner more fees and be more revenue generating in the months to the years to come. Okay, so Algorand's proposition, same thing. pretty much like HBAR, but of course naturally it's not a pure, it's also a smart contract platform, but I would say that the value proposition is very, very different. Hedera uses Hedera Hashgraph uses Hashgraph protocol. It's not blockchain. So it's still a blockchain, but it's not the same protocol as the existing smart contracts. Okay, it's a little bit different. It's very, very technical. I don't want to get into that. Always the video becomes very long and very boring. Okay, so if you look at the charts, I would want us to start looking at whether we come back into this long-term trend channel. Okay, let's ignore this for the time being. We see whether we come back in, and you must be thinking, oh no, Ryan, wow, I have quite a bit of Algorand, at 98, 89 cents, 95 cents. What do I do? Okay, same thing. If you have too heavy a position, right now we have some positions that are in the money. Hence, I kind of alerted the group that Hedera Algorand actually was about 114. Not too bad, looking quite healthy. But since the market actually started to correct, right? Algorand has been correcting sharply, but take note, no, Algorand has not done any all-time highs. It didn't even manage to cross $2. So same thing, we tried to build a position, and as of now, you see Ethereum has already dropped below 1,004 already as we speak. So yesterday's 1,005 wasn't the best, okay? So since it wasn't the best, we wait for the level that we discussed, which is 1,200. We wait for that level. We see whether there will be some bounces technically. We use profits, buy again. If there are very little profits, start tapping into the reserves, okay? That's why we try to test out, we go slow. When we say go slow, don't have to buy one whole Ethereum, okay? Buy 0.25 Ethereum, buy 0.5 Ethereum. Regardless of how large your account, right? You can use up your money or your ammunition very, very quickly, okay? And nobody likes the feeling of getting stuck. Now, why does the market want you to get stuck? Because there is a lot of staking still available, staking services available and running around. So this staking services means that, okay, you are stuck at a certain level, okay, you are stuck at a certain level, at a certain price. Naturally, you can't do anything about it. You're also not going to short the market because you don't know how, right? End up, what are you left with? You're left with it sitting there doing nothing. So staking, the staking service is available within all these platforms: Coinbase, Huobi, Binance, maybe even Kraken. I don't use Kraken. I don't use Bitfinex. I don't use Bittrex or whatever. Okay, so I just use, and I am familiar with Huobi, Binance. And the staking service basically provides liquidity to people who do want to short. So what happens is that when you stake, you're given a percentage either daily, after 7 days, after 30 days, after 6 months, on the amount that you are depositing. Okay, take it as a fixed deposit. So you're given an interest based on a APY, annual percentage yield. So your annual percentage yield will be listed and provided for you. After that, the platform will so-called take it and it will lend it off to people who are wanting to short the market, obviously, right? Who want to short Ethereum, traders who want to short Ethereum, traders who want to short Algorand, okay? And then you, on the other hand, are not going to take on that risk because no matter what, they will have to eventually close the position, okay? No matter what, they will always, when they are shorting, they will definitely have to close the position. That will be returned to you with an interest. You are not going to lose your tokens, okay? The platform will just balance everything out, okay? So you can earn. You basically can earn. That means although you might be losing value, but one Ethereum is one Ethereum. It doesn't matter. What price it is. Let's say, for example, you bought your Ethereum at 1,005. After a few months, oh no, it's $1,000. Okay, so you lost practically a good percentage of the value, but you're earning an interest. That means you're earning in Ethereum. So you are having more Ethereum to go and move forward into the next leg. Okay, so that's how people have been strategizing why staking isn't that bad. Okay, so that's one alternative. Okay, so for core, for folks who are comfortable with staking, you might want to consider doing that. But bear in mind, do it with the platforms that I just suggested, because they are the ones that are running the longest. But alternatively, there's also F2.0, which requires staking and lock-in for 2 years, okay, minimally. All right, so if you're staking with the Ethereum network, then it's 2 years. But if not, it's going to be it can be via an exchange that gives you shorter time frame, allows you to have more liquidity. Okay, but anyway, this dip is already happening as we speak. Yeah, so we've covered Algorand, H bar, Curve. These are the out of the money positions, and then we leave them to simmer and cook first until we can get better entries, or we see them staying supported, right, at on a longer time frame. Then we start allocating our precious resources to these particular tokens. Okay, BNB. Okay, so BNB is in a very unique position in the market at the moment. What I feel is that they want to kind of compete with Coinbase's IPO. Okay, I feel that they are trying to compete with Coinbase IPO. So people who are not able to participate in Coinbase's IPO, right, who don't get any allocation, will be looking at BNB as an alternative. This is what I kind of feel. Okay, it's not naturally going to happen, but I feel that if Coinbase is going to list their IPO on Nasdaq, which I think should be Nasdaq, right, it's going to be oversubscribed, and people are going to be buying up in the market. So naturally, Binance has the best chance to prove its point. Like, hey, you can't get your Coinbase IPO, come to me. So the brain, right, automatically will say, oh, okay, wow, okay, I noticed that Coinbase is valued at this. Binance, I would say, has done pretty well, in terms of, although, okay, so the only thing that as an investor, you're concerned about the numbers, the actual numbers behind Binance, because naturally Binance doesn't have to be as transparent as Coinbase in terms of its valuation. So far, whenever in crypto, right, the beauty of it is that you don't have to dive too deep into the facts and figures. Okay, everything is pretty much eyeballed. Okay, but you have to learn how to piece everything together. So this story that I'm kind of sharing with you is obviously may not be the case, but I look at the way Binance has positioned themselves. I feel that they want to compete with Coinbase's IPO to say, hey, we are also doing pretty well. We are the Asian version. We also have Binance.us, but not many people use Binance.us because most US citizens prefer using Coinbase. Okay, it's just very natural. Okay, but now when I look at it, I think that we can actually dedicate more resources to Binance's play. But like I said, it's high risk because Binance did come from $20 and now being 10x. Okay, 10x the price, even at current prices. So I would say that this is more of a big boy play. Okay, I wouldn't say it's meant for the smaller accounts, because naturally, if they decide to pull the brake on this play, right, it can be pretty disastrous. But if it pays off, guys, it could literally be a 2x quite immediately into the year. Okay, so I think let's observe first. I don't get anyone too excited. We don't care about whether or not my theory is correct. We care about what kind of levels do we get in the days, weeks, or months to come, and then we try to push for something around for at least the next month or two. Okay, I would say Binance would be a good play. So I do have positions already. Okay, I do have some positions already. I would want you all to get some as well, and then we see how. Same thing, I would say that no more than 5% for this at this current point, but I would prefer, and it would look better between sub 200. I think sub 200 levels would be more attractive to even 175. The more conservative folks may even want to consider once it touches the lower half of this channel. So I think this part we can ignore. I always like to shave off because too much, because you know why? When we draw our fibs, when we draw our upward trend channel, we always like to, it's always based to the top. Okay, so this has always caught a lot of people off guard. So what I like to do is I shave it off, I ignore, and we see where we come off to. So theoretically, right, we only have, conservatively, we want to start building based on this. So we can even buy, sell, buy, sell. But of course, naturally, it sucks when it goes above and beyond the channel, and we are worried that it doesn't come back in and forms a new upward trend channel. That would be very painful, but that's just the way it is. We can't have everything. So that's why I'm saying building deep in the money positions allows you to say, for example, if you build let's say you had 1,000 to 2,000 Ethereum, BNB at the time. This goes for any token. I'm just giving an example very quickly. So say you had 1,000 to 2,000 BNB at the time. You build. You had so many, right? Whenever this happens, you already have let go of some. This happens, you already will let go of some because it starts to be a new channel, right? It's a new thing. Let's say you were having this. So this you will have let go. Suddenly you had this movement. You will want to release as much as possible. Then you see, okay, whether there will be opportunity. So you would have maybe bought back here, you bought back here, and then after that, you're starting to see the selling pressure easing. Okay, the selling pressure is easing. Hence, the candles are starting to get smaller, not so crazy. So you may see a very quiet consolidation and less buying or selling activity. The range getting thinner or narrower. Okay, and then that's when we can start buying again, the prices getting more supported. So these are things that you want to observe as you're part of this group. Just be more patient. I think the moral of the story is that when we make money, it's very fast and furious. But the building part is the part where it gets to people. It becomes very long drawn. It becomes very boring. Look at it, guys. This is a one day. This is the one day, guys. Okay, this is the one day. So this is the one day. You have we had some activity here. Okay, we had some activity here. Boring. So expect that there will be something similar happening here. Okay? Expect it, guys. Okay? And I don't blame people. I'm not gonna, point fingers or whatever. There will be that point in the market where it gets really quiet. So we're gonna have to be a bit more patient. We're gonna find positions to snipe, get in, get out, that kind of thing. Okay, so there will be trades, right? There will be trades. It's just that I want to make sure that the market is more, is more certain. Because if it's not gonna be certain, and I'm be putting out trades just for the sake of putting out trades, most likely people are gonna be losing money left, right, and center. So I don't really want that. I want to minimize that as much as possible. Okay. So yeah, in terms of allocation, I would say that same thing, core, we still continue to build BTC, Ethereum, okay, that we dedicate profits. Whenever you have profits, we make, we try to maintain a high percentage of USDT, so 50% and above. We still keep a balanced approach for now. We look at the fact that the market is still actually bullish, guys, okay, the market is still actually bullish. It's still it's still on an uptrend, okay? Because firstly, our market cap is going up, and our dominance is 60% always in 60% in favor of BTC as of now. In terms of whether it will turn or not to become more altcoin favored, I would say that probably we look at push towards end April, May would be when we start seeing the activity return. So for now, I would say that it will be more on a bearish stance. We will not be shorting. Okay. If you decide to short, that risk is totally on your own. Okay. So I will not encourage it, but that's on your own. I cannot stop you. In terms of the other allocations, keep them small. Keep them small in relevance to your keep them small in relevance to your percentages. I would say that Algorand, H bar and Curve, we keep them to less than 5% of the portfolio. 5. That means no more than 20% allocation. I would say that if you can bring them down to less than 20%, it would be good. So instead of cutting them off, I would say that increasing your USDT would be better. okay, then that way the percentage starts to drop, right? Don't cut them off. Don't cut them because they are out of the money. Don't bother, okay? Because the loss at this point of time is for the position is too, it may be too big, right? So don't do that. Try to maintain the position first and bump up your USDT. Refusal to do so is going to be very challenging for you. If you do not top up your account, I would say that it's going to be a very long struggle. And of course, maybe some of you are just here to learn. Maybe you're not very, very interested. Once we hit this phase of the market, that's okay as well. But I would say that topping up would be the best course of action so that we can accumulate bring down the average price. And when the cycle comes back again, you will have a ample position or strong position for you to capitalize and profit from it instead of cutting it now just because it shows a 30-40% drop. It is very normal. You would expect that because we were buying higher and higher into the market. But thankfully, I pulled the handbrakes on most things at a pretty opportune time. I couldn't have timed it better. I'm very thankful that the team has been very on the ball so far. Okay, I don't work alone. I have my analysts and my team to assist. Okay, so whenever I'm the face, it doesn't mean that I work alone. Okay, it's just that naturally I am the face, I am the brand. But at the end of the day, I work with professionals who are giving me the additional sound advice as well. Okay. Okay. What else? In terms of what are the main plays, I would say that we continue to monitor Sushi and Uniswap token prices, which have not been extremely promising. They have kind of been capped, and in fact, I see them forming a lower low. In terms of DOT. EDA did very well yesterday, but I think even so much uptrend and uptick, it's also starting to come off. But we can monitor. So the EDA ecosystem is definitely a long-term buy, short-term sell, short-term bearish for me. In terms of what's the other ecosystem? DOT. Yes, I would want to accumulate some DOT as well as an alternative to high gas fees for Ethereum. Okay, but then again, long-term buy, short-term bearish for me as well. Okay, so yeah, guys, BNB also another chain that we BNB token is also another token that I feel that will give us very good growth in the long run. So all these key plays are our focal points for now. In terms of speculative tokens, I would try to avoid because it's just too random. I have a client who's potentially coming in asking me to look through 100 tokens. I feel that that client is probably going to be in a world of hurt lah. But of course, naturally, if the client had been building those positions during this period, he doesn't have much to worry about. But as of now, his gains are definitely lesser had he not been smart enough to take profit, because that client was on and off, going back, coming back in. Everybody has their own thinking. Everybody eventually will have their own investing methodology or trading methodology eventually after joining me. So he's coming back to me now because he believes that there's a there's going to to me it is a long-term bull. Okay, it's a very long-term bull, but interim there's going to be plenty of volatility. That interim volatility is the one that hurts the most because it hurts you psychologically, especially if you were overexposed and you got too greedy buying higher and higher. Because the natural human mentality is, okay, I want to buy more when it's very green and very strong. When it's quiet, I don't want to buy anymore. It's boring to me. It's like my job. And to be frank, I understand. But it's during the quiet times like this, when you stay consistent and stay the course to build your position, that you reap the benefits from this action. And you can see it's very, very fast, guys. So it could be a case where we see a very quiet, slow consolidation happen any point of the market, guys. It could happen 3 to 6 months later, or even 9 to 12 months later. And then you're going to have to build until you see a price action movement. And we want to see how sustainable is the run. Okay, if the run is not sustainable, we have to really stick it out. We have to really stick it out so that we can enjoy. You see, you come late to the party, naturally you will reap the least. But at least you can see that how much you could make when you do it right. Okay? So anyway, guys, thank you so much for watching. I think it's naturally past half an hour. In fact, it became a 1 hour video, but I had to emphasize a few key points a few times. But take note that this market is definitely here to stay. Just make sure that you continue to push forward with and stick to the strategy. Thank you so much for watching, guys, and have a great weekend.